Two people walk into the same bank on the same morning through the same glass door. The first is a young man in a navy hoodie holding a crumpled deposit slip. He takes a ticket from the little red number machine and sits down in a row of stiff blue chairs under fluorescent lights, next to a wilting plant. The clock on the wall ticks. 19 minutes later, a stern woman in a gray blazer and rectangular glasses slides a paper across the counter, a fee schedule, and tells him, without looking up, that there's a charge for the privilege of having no money. The second is an older man in a plain gray t-shirt and faded jeans. He doesn't take a ticket. He doesn't sit. A frosted glass door at the back of the lobby opens for him, and he walks through it like he owns the hallway, because the bank called him yesterday just to check in. Same bank, same door, same morning, two completely different institutions. That's not bad luck. That's not a rude teller. Your bank keeps a list, you're on it right now, and you've never been allowed to see it. Because banks don't see customers, they see segments. Behind every teller window, there's a second screen, the one angled away from you. And on that screen is a real system. Relationship tiers, profitability scores, retention flags. It decides how you'll be treated before you open your mouth. It decides who pays the fees and who gets them erased. Who waits on hold listening to smooth jazz, and who has a banker's personal cell number. Who gets sold to, and who gets served. Today we're climbing the entire list, 5 tiers bottom to top. And keep your eye on the woman in the gray blazer as we climb, because at every level of this ladder, she becomes a slightly different person. By the top floor, you won't recognize her. Tier 5, balance. Somewhere between 0 and 1 paycheck. Picture the lobby at ground level. Buzzing fluorescent panels. A velvet rope folding you through an empty maze to reach the counter. The woman in the gray blazer stamps a form without making eye contact. At this tier, you are not the customer. You are the product line. Here's the mechanism nobody explains while you're standing at that counter. Overdraft fees. American banks have collected billions of dollars a year from overdraft and insufficient funds charges. And study after study found the same thing. Most of that money comes from a small fraction of accounts hit over and over. The accounts at this tier, the people holding the least money pay the most just to hold money. Watch how the cascade actually works. It's a Tuesday. A $4 coffee tapped on a card with $3 behind it. The register beeps green, the payment goes through anyway. Helpful, right? Then the phone buzzes and a red notification blooms on the screen. Overdraft fee, $35. The account is now $36 in the hole. So when the phone bill auto-drafts on Wednesday, it overdrafts too. Another red bloom. Another $35. By Friday, that $4 coffee has cost $74. And the woman in the gray blazer brings her stamp down on the statement, standard. Stack the rest on top. A monthly maintenance fee for dipping below the minimum balance. A fee for being low on money, charged to your money. An out-of-network ATM charging you $3.50 to reach your own cash, plus your bank charging you again for using it. At Tier 5, the business model is your mistakes. And understand, there's a floor below this floor. Off the list entirely, there's a world of check-cashing windows behind bulletproof glass, taking 3% of a paycheck just to turn it into cash. Payday storefronts with neon signs, lending at rates that would make a credit card blush. The further you fall from the list, the more expensive money gets. Being broke is the most expensive thing in America. Hold on to that. It matters at the end. Tier 4, $1,000 to $25,000? You've built a cushion now. The red notifications stop blooming, and something strange happens. The bank goes quiet. The lobby looks identical, but the temperature changes. You're no longer profitable through penalties, but you're not big enough to court. So you become invisible, except on the days they want to sell. Here's what that looks like. A man walks in to deposit a birthday check from his grandmother. $80. A card with a cartoon dog on it still in his other hand. And before the deposit slip is even stamped, the woman in the gray blazer makes eye contact for the first time on this ladder and slides a glossy brochure across the desk. The platinum card, 0% for 12 months, she says. in the exact tone of someone reading a script. Then the auto loan, then the payment protection plan, insurance against the card she's trying to hand him. He came in with a birthday check. He leaves with 3 pitches and a brochure in his pocket. That's tier 4 in one scene. At tier 5, they charged you. At tier 4, they recruit you. Because here's the math running on that hidden screen. Your savings sits in their vault earning a fraction of 1%, while the poster behind the teller advertises a credit card at 24%. Picture those two numbers on an old brass scale, a feather on one side, an anvil on the other. That gap is the entire relationship. To the system, you're not a saver, you're a borrower. They haven't converted yet. Tier 3, 25,000 to 250,000. Somewhere past 25 grand, a switch flips, and you can watch it flip. A new word attaches to your name in the system: preferred, priority, advantage. The woman in the gray blazer comes around the counter now. There's coffee in a real mug. There's a desk with her nameplate on it, and she gestures to the chair across from it like you've always been welcome here. The fees you used to pay? Waived, with a single keystroke. Sit with what that means. The keystroke always existed. Same finger, same key, same screen. At tier 5, it charges $74 coffee to the person who could least afford it. At tier 3, it makes the charge vanish mid-sentence, before you finished asking. Nothing about the fee changed. Nothing about the bank changed. The only thing that changed was your number. And now the real perks start compounding. This is called relationship pricing, and banks publish it right on their websites. Keep bigger combined balances, get better rates. Watch it in action. A couple sits across the desk shopping for a mortgage because their savings, checking, and investments all live under this one roof. The woman in the gray blazer types for a moment and takes a quarter point off their rate. A quarter point sounds like nothing. It's a rounding error in a conversation. On a $400,000 mortgage, it's over $20,000 across the life of the loan. 20 grand granted or withheld by a keystroke based on which tier the screen says you are. The price of money drops as you accumulate more of it. Read that sentence twice. And by the way, banks aren't unique. The IRS runs a version of this list. Landlords run one. Car dealerships absolutely run one. That's what this channel is. We climb the hidden ladders, one institution at a time, and figure out where the handholds are. That's the show. If that's a show you want, you know what the button's for. Tier 2, $250,000 to $2 million. Cross this line and the vocabulary changes. The bank stops calling you a customer. You're a client now. The scenery changes with it. No more fluorescent lobby. Picture a wood-paneled office upstairs, a warm brass lamp, a window with a skyline view the tellers downstairs have never seen. The woman in the gray blazer is here too, and she smiles. It's small, it's brief, but it's the first smile on this entire ladder, and it lands like a plot twist. Private client services. A dedicated banker who answers on the second ring. No menu, no hold music. Invitations, actual printed invitations on heavy cardstock to events. Fee schedules that quietly no longer apply to you, like gravity taking the day off. Here's the flip that explains everything. At this tier, the bank profits by keeping you happy, not by catching you slipping. Your assets feed their lending, their management fees, their entire balance sheet. Losing one tier 2 client costs them more than 1,000 overdrafts earn. So run the coffee test again. Remember the $4 coffee that snowballed to $74? Same event, tier 2. A card declines at a coffee shop. But before the man in the navy hoodie has even noticed, his phone rings. A calm voice. We saw a decline on your account, sir. It's been resolved. Our apologies for the inconvenience. The identical event. At the bottom of the list, it's a $74 penalty. At the top, it's an apology. Delivered to you before you even knew you needed one. Tier 1. $2 million and up. Private banking proper. At this altitude, the bank doesn't wait for you to walk through the glass door. They come to you. Nobody slides a credit card brochure across this desk. Imagine pitching a platinum card to someone who could buy the branch. Up here, they structure lines of credit against your investment portfolio, so the portfolio keeps growing while you spend against it. You never sell your winners. You never trigger the tax bill. The money works twice at the same time, and multiple banks compete for the privilege, offering rates the branch downstairs has never heard spoken out loud. Which brings us back to the man from the opening scene. Gray t-shirt, faded jeans, waited 0 minutes. He's tier 1. He's been standing at the very top of this list for the entire video. While the lobby judged the hoodie and the crumpled deposit slip, the screen behind the counter was reading something else entirely. The list was never about the clothes. The woman in the gray blazer stands when he enters the room. 2 coffees are already waiting on the table, and she says 7 words she has never said on any floor below this one. We've prepared some options for you. Now here's the part that actually matters, so lean in. This isn't a villain story. Nobody in that building is cruel. The woman in the gray blazer isn't a monster at the bottom and a saint at the top. She's the same employee following the same screen. The tier list exists because of one number: lifetime profitability. See the whole ladder at once. 5 versions of her, side by side like a film strip. The stamp, the brochure, the waived fee, the small smile, the standing greeting with 2 coffees. At the bottom, you're profitable through fees. In the middle, through interest. At the top, through assets. The treatment was never personal, it's pricing. To the system, you were never a person, you were a revenue category, which sounds bleak, right up until you realize that categories can be gamed, because everybody assumes you climb this list by earning more. You don't. You climb it by consolidating. The tiers don't measure your salary, your hustle, or your potential. They measure one thing: total balances at that one institution. So here's the actual playbook. 3 moves, in order. Move 1, gather the scattered money. The same 50 grand spread across 5 different apps and 3 old accounts reads as 5 nobodies. Pulled under one roof, it reads 2 tiers higher. Same money, different rank. The list can't see what it can't count. Move 2, build the 1-month wall. The moment you have a single month of expenses parked in that account, an overdraft becomes mathematically impossible, and you permanently exit the only tier that's designed to bill you for existing. This move costs nothing, it requires no raise, it's the entire cheat code for the bottom of the list. The bank profits from your emergencies, which means an emergency fund was never really savings. It's armor. Move 3, make the number visible before you need something. Planning a mortgage, a car loan, a rate negotiation. Move the balances in months before you apply, not the week of. Let the screen watch your number sit there. When you finally sit down at that desk, you're not asking for a favor. The system has already re-ranked you, and the woman in the gray blazer is just reading the new screen. Tier 5 funds the building, refuse to be Tier 5. And remember, banks are just the first ladder. The IRS has a list. Landlords have a list. Car dealers definitely have a list. And next time, we're climbing one that decides whether you ever have to work again. The exact number that sets you free. Scout says subscribe. I'd listen to him. He's Tier 1.